Hey, welcome back to the channel, Fully Invested Fi. It's been a very busy week since the layoff last week. I've been up most nights until like midnight getting my portfolio ready for the job hunt. And yeah, finally finished that on Wednesday night, luckily. So yeah, kind of slowly started applying to a few key jobs the last couple of days. Hoping to start having casual chats while taking a much needed break, really. Still trying to hit potentially my plan of just kind of taking a 2-3 month break before I kind of really hit the gas pedal on the job hunt, But yeah, needless to say, very, very tired. With that done though, I've been able to refocus a bit more on my portfolio and kind of take a second look at everything, honestly, especially in light of the layoff, right? Because that kind of flips everything on into its head, right? So I kind of came to a couple of key realizations. One, I kind of really need to reduce volatility overall now to kind of like focus a bit more on capital preservation now that I won't have as much income coming in, right? I'll just have the unemployment, which is like less than half what I was making before. And yeah, living out of my portfolio will be a lot more taxing than usual, but I'm kind of still hoping to do it, right? And two, I need to up the income a little bit to bridge the gap between my monthly dividends and unemployment, and then also my monthly expenses, like I mentioned, right? And yeah, so we'll see what I did there. And then also part of it's also just kind of cutting down on expenses and stuff. But I'll be going over all the big moves that I made this week. There was a lot of big ones. Also kind of what I'll be kind of hitting next week and looking out for, right? So before we get started, just the usual disclaimer, this video is for entertainment and education purposes only. I'm not a financial advisor and nothing here should be taken as financial investment or tax advice. I'm simply sharing my personal investing journey and documenting my own results. Investing always carries risk, especially when using margin, and you can potentially lose money. Don't copy what I'm investing in blindly without understanding the risks and doing your own due diligence. No returns are guaranteed. So then also if we pop over to the monthly flow chart here, sorry, I still haven't had a chance to update this, hopefully next week maybe. But yeah, as a refresher for anyone that's new to the channel, this is kind of like my fully invested flow chart. This is usually what I do to kind of live out of my brokerage and invest 100% of my paycheck. It used to be 10.8K every month that I'd be putting in, but now that'll be, for the next few months, it'll be closer to 4.4K every month with my unemployment income. I invest normally into growth and high yield ETFs at like a 40 to 60% split. But with the layoff, I'll be focusing more just on the high yield ETFs, honestly. And safer ones, like ones that are kind of yielding anywhere from like 12 to 17%, right? So think like SPY-I, QQI, T-SPY, TDAC, and things like that. Just so I can kind of keep my monthly cash flow going and yeah, my cash flow just kind of going up and maintaining it. So I've stopped using a traditional bank account to live entirely out of my Robinhood brokerage account. I use cheap margin of 4.5% to bridge the gap between my bills and my dividends. I sure wish my mortgage was that. I'm at 5.95%. And the goal is to ideally never sell a share, forever compound my growth in high yield assets, and have my monthly dividends eventually exceed my monthly expenses. We'll see how I made the exception to this rule this week. And I've kind of talked about it before as far as kind of like rebalances, especially on the growth side. But yeah, ideally I'm not selling and like taking money out, right? But yeah, if you want a more in-depth breakdown of this chart, check out an old video here that kind of goes over the old flow chart. It'll be at the top right. And yeah, let's just get started. So if we pop over to Robinhood, you'll notice that my portfolio is pretty different. So one, the overall number has jumped here from about 14K. You'll notice that this list seems a little bit lighter, right? My buying power here has increased by quite a bit. So it's at $128,516 right now. My margin has dropped to $110,794. And yeah, this is cash available for withdrawal as well, 64.2K. So yeah, we'll kind of go over all these changes, honestly, and you can kind of see that here as well too on my investment sheet, how this is looking a lot lighter, some missing positions here, some new ones actually. And yeah, you can kind of see like my margin health, how that's looking as well. A deeper look at that. My gross value has obviously dropped, even the margin coming down there, but yeah, we'll get into that. So if I pop back over to Miro, just going to go over all the stuff that happened this week. So there was quite a bit just in the last 2 days. So things that I've done. So earlier this week, I decided to pull out 14K of my contributions to my Roth IRA. So I'm doing this tax and penalty free just because you can always pull out your contributions that way. So that's what's kind of always, I talked about this before. That's nice with the Roth IRA. It can kind of be like a emergency fund in a way. So as long as you don't touch your gains. So I have 7K of gains left in there, and that I didn't touch. I took out exactly only how much I've contributed. So you lose that room, quote unquote, right? So I can't like replenish that 14K in future years. Like you only get whatever new one comes up every year. But it was a thing I was willing to take here and bring it to the taxable brokerage and kind of generate income from that. So for today, what I started doing with that is I invested 2K of that into TDAC, which I already have, and then also 2K of that into T-SPY. So combined, these two give me about like 15.5% yield, right? Like if you take 14 plus 17 divided by 2, that's roughly their yields. That's 15.5%, right? So if we calculate that, right, that $4,000 times 15.5. So this is in a year. And then if I divide by that 12, I basically added like $51 to my monthly income through that investment. So yeah, my plan with this is to DCA the rest of that 14K. So there's 10K left now into the account next week. So both using TDAC and T-SPY. Maybe other ones, like some other people have brought up some potentially other good positions, potentially like MLPI, things like that. But for now, I'm kind of leaning on these potentially. So yeah, I'll probably be doing that. Yeah, depending on if there's any dips next week or if it's like there's a heavy dip and I'll just go in with the whole thing. But my plan is to maybe do 2K a day, something like that every day. And yeah, and then as far as my dividends, so DRIP was already off for all my high yield ETFs, just because I want that to help control the margin balance, right? But I also turned everything off for the growth side of things. So SCHD, VU, SPMO, QQQM, just so everything is contributing to reducing the margin balance right now, given that I'll be living heavily out of the portfolio. And then I'll turn that back on whenever I get a job again for at least the growth side of things. And then the big one, so I sold out of all my single stocks with gains. So that's Apple, Microsoft, Google, Meta, Costco. So that gives me 35.7K of capital to play with and 6.9K in gains that I realized. So yeah, obviously this is a big one. Kind of gave a heads up to people in the Discord about this if you go in my trade alerts. Yeah, so I'm only keeping Hood and Take-Two here to kind of let them recover and maximize gains, because I want to use those gains to help offset things I want to rebalance on the high yield side of things, right? And I'll kind of get into that in a little bit here. But this is the big one. I just did this earlier today. Heart was beating fast doing it. Like when I'm moving that much capital, always kind of gets me like, oh, this is crazy. But yeah, I think for the overall health of the portfolio, given the layoff, I think this was an important one to do just to kind of reduce volatility overall. One thing that helped really push that over the line was kind of seeing these numbers here. So I kind of put all the rough allocation of those in there, and then I kind of started comparing it with like other of the funds that I'm considering. And yeah, you can kind of see how the beta of my stocks is like 0.96 beta over here. So yeah, I'm ideally what I'm wanting to do is to reduce the volatility of my portfolio a lot more through putting the single stocks into an ETF, and I'll kind of go over those choices there. So yeah, that's a big one. And then also filed for unemployment this week. So from what they're estimating, I'll be getting 1.1K per week or 4.4K monthly roughly. And yeah, can get this for up to 6 months, and thinking this will all be invested as if it's a paycheck as usual. So just a lot less capital that I'm putting in and investing. And yeah, and then also, took an initial pass at trimming monthly expenses. So cut unneeded subscriptions, recurring Amazon subscriptions, and things like that. So yeah, there's definitely still more I need to do there. And I'll kind of just be taking a gradual pass at that as I see other stuff come in that I might have missed. But so that's all the big stuff that I did this week. And yeah, and then as far as what I'm considering next week, so like I said, I'll be DCAing the rest of that Roth IRA money into TDAC T-SPY, but also, so that 35.7K in capital from the single stock sale, I want to put those all into ETFs now for just lower volatility overall. So I'm kind of considering a couple different pairings here. I haven't really settled on which one. That's why I just sold stuff today, and then I'll kind of handle the rest next week. Thinking about like VGT, which I've had in the past, just as like a pure tech play ETF, but didn't want to just go fully in that to just be like almost just as volatile as the single stocks. Definitely, but VGT less, given that it's an ETF, but yeah, potentially VGT and or ORR, yeah. Definitely a shout out to Foxhound on the Discord, who's kind of like put that on my radar, and CLSC as well, and a couple others on the Discord, Bankshop Bobo. But yeah, considering VGT, ORR, or and CLSC, this would actually potentially be like the lowest beta option out of all of these, which could be interesting. I know Foxhound is a big fan of pairing these two together, or potentially ORR and SCHG if I want like a less volatile version of VGT. And this one has Hood too, which is nice, which I've had before, that I still have. But yeah, different pairings like that. And yeah, and I was looking into like ORR a lot this week, right? You can kind of see their stuff here. It's only one ETF that Militia Investments has. It's basically run by this one fund manager, David Orr. Been doing a lot of research on him this week, just watching videos and interviews. Definitely been impressed by kind of his mindset. And he's like an ex-poker player, which is funny, and kind of hasn't come from a traditional finance background. So I like kind of how he's thinking about stuff, and yeah, just way different than your normal finance person, right? And I think his performance kind of speaks for itself. Like if you go to, this is his hedge fund, so Militia Capital here. And then the ETF is kind of new for the last year, where he kind of like took a portion of his hedge fund and made it into an ETF. But yeah, I think his performance kind of speaks for itself, right? You can kind of see it here when you compare it to the S&P 500, like crazy outperformance in 2021, crazy outperformance in 2022, even though the S&P was down 18%. He underperformed in 2023 at 13% here. In 2024, just about matched it. And then, yeah, in 2025 had crazy outperformance. So yeah, he does like a long short equity thing on his hedge fund and then also on the ETF. A lot of focus on like global stuff and specifically Japan as well too. And he even shorts some high yield ETFs too. I think he has like YMAX in there. If you like go down to his funds here, you can kind of see all the stuff that he has there, whether he's long or short. Oh, there's the shorts. Yeah. So yeah, short Starbucks. You can kind of see there. Yeah, you can kind of see all the shorts there. So maybe he wound down his YMAX short there. I think I could have sold when I saw it the other day, or in another version of the list. So I guess it is not there anymore. Arvana, like you can kind of see all the different shorts that he's holding. And yeah, just like how he hedges his bets there and kind of like how he's quick to cut his losses if he can. And that kind of comes from his poker background of just kind of having to do so much bets and kind of cutting your losses quick and whatnot when you have to. You won't stay in a losing position like overly long, is what he was mentioning. But yeah, definitely interested in this potentially. And if we pop back over, and yeah, and also CLSC, that's another long short one, but it's kind of more focused on US stuff. So this one gives a bit more global exposure, which is nice from ORR, which yeah, my portfolio is very heavy in the US, very heavy in tech. So kind of looking for something that would help reduce that volatility overall, right? So that's why like potentially this one might be a good one, just so like, yeah, going from the single stuff and potentially going down there just because yeah, what's left in the portfolio is just very, very heavy in tech, right? So this 135, like, yeah, 49K of that is SEHD, which is nice. So about like a little less than 100K is in tech stuff. And then I have a lot of tech stuff and the high yield stuff. But yeah, we'll see. We'll have to think on that. And yeah, also open to any people's suggestions as well too. And on the high yield side, so originally I was thinking to like sell out of Misty potentially when I was looking at that. But honestly, like in the grand scheme of things, Misty right now, just because it's gone down so much, its allocation portfolio is like 1%. So it's like not the hugest deal right now. And then also if I did realize those losses, that's quite a bit, which is more than like the gains that I realized, which I added to my thing here. You can kind of see that there. So I have 6.9K to play with potentially. If my goal is to kind of reduce overall volatility in the portfolio, I think one that would kind of make the biggest dent is probably targeting WPAY here, since that has like 25% leverage. So that's kind of like leverage on top of leverage, which I'm already using. So this might be a good one potentially to kind of rebalance out of. And then that way realize this loss here, but I still have like $1,000 of room to potentially do something else. And that's where maybe I was thinking potentially Chippy or YMAG. They have like still similar yields as WPAY, but and also weekly, which I kind of want to get close to when I look at that. So right now my yield on cost for WPAY is roughly this 39.45%. Chippy would be 45. YMAG is at their last one was 43. So they're kind of in the range there. And yeah, at least for YMAG, I know all those positions in there, would be comfortable holding all those, given that I know them. And then Chippy, it's a lot more in semiconductors. Of course, bullish on NVIDIA, given that I'm holding NVIDIA already. So maybe that'd be like double exposure there, but a lot less so in YMAG potentially. But yeah, so thinking on that, and that's why I haven't quite made a move on all that. I knew for sure that I wanted to sell all these, and that's what I did this week. But yeah, still kind of thinking on these combos here and what I might do there. So those are the big things I'm considering for the portfolio after this week and how I'm kind of navigating the layoff. So if you have any thoughts, definitely post them in the comments or on the Discord. Always happy to hear out people's thinking on that. But yeah, I think all these changes are important given the layoff, right? So that's pretty much it for the video. Next week, I'll come back with an update. Hopefully all the stuff that I was talking about as far as investments will have been done. So we'll kind of see how things have changed. But right now, this is my margin health with all those changes. So right now my equity, that pushed up my equity to 60.22%. My margin used is down to like 110.7K. And yeah, the bigger margin buffer, of course, with all that. And then there's 128.5K of buying power and 64.2K of cash available for withdrawal. So it is nice to kind of have that. So I don't know, maybe I have a last minute change of heart and I'm just like, maybe I just leave that deposited to get the margin stuff down. But I'll think about that over the weekend and kind of reconvene next week and see how that's all doing. But yeah, as far as thinking, I'm like probably leaning towards these, right? So we'll see. But yeah, that's where I'm at. I was kind of like doing some like scenarios here where I could kind of just copy my portfolio and kind of start switching stuff around just to kind of like play with the income and where that went up to, like where I was kind of like adding to TDAC, T-SPY. And yeah, T-SPY is new for the portfolio as well. But yeah, always nice to kind of scenario plan with the thing there and just alternative ways of doing it. So that is one thing that's nice there with how that's all working on the sheet, which you could kind of do too if you grab it for free on Gumroad. But yeah, that is the video. So as usual, if you want to follow me off YouTube, there's a bunch of different ways you can do that. I can do it on Blossom. Right now, I wouldn't recommend checking my Snowball. Kind of a mess right now. Went through a whole ordeal. You'll notice that the whole prof is all out of whack. All this stuff is out of whack. All the numbers are crazy right now. I was just noticing some oddities in my transactions with my transactions as far as like auto-generated transactions that were showing crazy gains, stuff like that. And I got in contact with support. And yeah, they told me to try something as far as importing stuff manually, and that kind of just made things worse. So I'm kind of just going back and forth with them to see if I can kind of potentially recover where I was at before, even though what I was before was kind of wrong. Just over the last week, stuff has kind of gone crazy. So yeah, maybe be careful with Snowball with that stuff. Definitely had trouble with that in this last week, which kind of sucks. So yeah, my numbers are kind of all out of whack right now and not actually accurate. So my spreadsheet's a lot more accurate right now. But yeah, and then also there's a Patreon as usual. You can kind of follow that if you want the backlog of all my backlogs of videos, and just as a way to have that just in case there's more YouTube shenanigans. And of course there's the Discord. You'll kind of see all my trade alerts here that I give to people. Yeah, a lot of good conversation. And yeah, just been running some of my living out of brokerage thoughts with all the rebalance stuff that I was doing. So yeah, always good to go back and forth with everybody in there now that I have more time. So yeah, definitely consider joining and get good community of people that some are living out of the portfolio, some are not. And so it's just nice to kind of go back and forth with people. So if you're appreciating these updates and kind of seeing how I'm going to navigate these layoffs and still living out of my brokerage, give me a like and subscribe, hit the bell notification to be notified for the next video, and I'll catch you in the next one. Peace.